and good weekend to all. It's Adil bringing you an inter-market analysis review of the FTSE 100 and the UK markets going forward for the week ahead, which should be commencing on the 11th of May 2015. It's been a while since I've done the last video. I've just been very busy, occupied, etc. Very busy, and obviously training for this, as you may have read my tweets, training for this Liverpool marathon in the next, I think we've got 4 weeks left, well, just over 4 weeks, given the fact that it's on the 14th of June. So busy training for that, and obviously with my normal training as well, adding cricket season starting and practicing for that. So it's all about obviously managing time at the moment, especially with 2 kids as well. So that's the reason why, but I will get back onto it and try and remain steadfast and put out these daily videos of the markets, etc. Okay, so let's discuss last week. Last week I had a negative week. I was minus 190 points for the week. It was a very strange and tough week, especially with Yellen's obviously comment about the markets being overvalued, and it was a very choppy week, a very strange week, especially with Greece still in the background as well. Now let's try and move forward now in terms of assessing everything, especially given the election uncertainty as well. I mean, you can certainly bring up a chart of the FTSE 100 and see the volatility, obviously, and attempting to obviously engage that volatility and attempting to trade that volatility and bring up a 60-minute chart. You can see you had a swing down to 6,800, and then obviously you had a rally back up to 7,050. So it's been almost a 200-point swing, given the fact, especially given the fact that earlier on in the week, or the week before, sorry, we had a pivot high of 7,120 before we reversed and moved to the downside. I mean, we flushed here as well at the support level, or key support level, at 6,900. And then obviously we reversed powerfully, given the fact that the election has been won by the Conservatives. Okay, so what does that mean going forward? Okay, so let's try and assess everything now from a fundamental perspective. Fundamentals, first of all, yes, the UK election has been won by the Tories. So that obviously, given the fact that the reaction thus far is positive, so therefore we have to interpret that as being positive. There's no more political uncertainty, there's stability. We know what's going to obviously happen in the next 4 years. We know their policies, the markets know the policies, the investors know their policies. So they're obviously interpreting that, and that's being interpreted as being bullish thus far. Okay, whether we attribute that to a short squeeze or whether we attribute that to actual organic growth or organic strength, with new individuals or new investors coming on board to invest in the market, and that obviously is certainly interpreted as bullish, that's yet to be seen. All we've seen so far is a reaction, given the fact that the markets had sold off quite substantially going into it. Okay, therefore a lot of individuals may well be covering their short positions. Okay, so that certainly needs to be taken into consideration as well. So for now, give it a day or two more for the buyers and sellers to really come in and cement their positions. Okay, and declare their intentions before I start to obviously claim the bullish argument. Okay, so we had the election victory for the UK. Then we have the commodities. Okay, and the commodities are dictated to by the dollar. Now the US dollar, if I bring up the chart of the US dollar is obviously building a support or a base, and on a 60-minute chart, as you can see, it's creating an inverted head and shoulders formation. So the dollar index is obviously holding support or building a base here now, especially with the stronger jobs data on Friday. Okay, that certainly adds argument to the rate hike being in September. Therefore that's negative for global stock markets. That's my interpretation. Okay, there has been, I mean, from what I'm reading, they are stating that it's a Goldilocks scenario or situation, given the fact that the jobs report is solid but not solid enough to obviously rate or trigger a rate increase. I have to disagree with that. Okay, especially with the US dollar chart being at support. Okay, that certainly supports my argument. Now you do have a potential here for an inverted head and shoulders formation as well, reversal, and that certainly needs to be taken into consideration. Okay, so from my perspective, the actual economic data that came out on Friday from the US in terms of the jobs report was solid, strong enough for a bounce in the dollar. A bounce in the dollar obviously hurts commodities, and that will hurt the FTSE 100. And yet we still have to see whether or not the post-election euphoria will continue. or whether it will fizzle out. Okay, because the economic data as of late has been starting to decline. Certainly has started to decline for the FTSE 100, and that certainly is negative. Having said that, the news flow out of China, okay, also on Friday it was very weak. Imports and exports were down quite significantly. Okay, so that certainly is a cause for concern. And the Asian markets have started to roll over too. This is another factor that certainly needs to be taken into consideration. So if I just bring up a chart of the Shanghai, for example, okay, so as you can see, bearish engulfing candle market has flushed on the Shanghai, and certainly the uptrend certainly is coming into question now. So if you bring up a chart of the day, as you can see in the daily chart, we've broken out this bullish channel, so therefore one would interpret that as being bearish. Okay, so this is basically where we are. We've broken out a channel, and the weekly chart, or should I say the monthly chart even, I mean if I bring up a monthly chart to show you, it's all about a double top resistance. The weekly chart itself has been a bearish engulfing candle, and given the fact that we haven't seen one thus far, certainly raises questions as to the continuity of this rally, okay, for the Shanghai. If I bring up the chart of the Nikkei, for example, okay, Nikkei chart again, if I bring up the daily chart, as you can see there, you clearly see that we've broken out of this rising contracting wedge pattern. Okay, you are making a potential lower high here now. So if I take the pivot high from here, take it to low, you're looking at gap fill resistance over here on the Nikkei, and then obviously looking for a potential move lower. Okay, so certainly a possibility here of a thrust lower. Okay, especially given the fact that the news flow, there was a comment on Friday which a lot of individuals I think overlooked with regards to QE in Japan. If I can find that tweet, which I think was very, very important, bear with me, see if I can find this, which more than likely I'm not going to find, because when you do want to find it, oh, here we go. Okay, Japan's ruling party policy chief BOJ, basically Japan's ruling party policy chief BOJ does not need further easing of monetary policy. Now that is a headline that certainly has been overlooked. Now, obviously going over a chart of the Nikkei on a daily basis, you can clearly see how that news flow is going to impact and incorporate within this obviously chart itself, given the fact that it's potentially making now a lower high. Okay, so that basically means that yen will start to increase. That will force the CHF or Swissy to increase. The dollar is already on the verge of increasing, as I've explained. Those three currencies moving higher alone triggers a risk-off scenario, and down we go. Okay, adding the fact also that Greece over the weekend, the actual news flow with regards to Greece is negative, given the fact that Schauble has warned of a default. Okay, so again, that is a risk-off scenario. Okay, so the Asian markets certainly have paused or are showing signs of exhaustion, given the fact that it was the Asian markets that were propelling the markets higher and keeping the markets afloat, and that catalyst is no longer there. So again, that certainly is a risk-off scenario or situation. Now, we have had news flow with regards to China raises deposit rate ceiling to 150% of benchmark rate from 130% as it cuts interest rates. Now that's interesting. Okay, so China over the weekend, news flow just coming out 15 minutes ago, China cuts rates again another 25 basis points, but it raises the deposit rate ceiling to 150% of benchmark from 130% as it cuts interest rates. So again, positive news and negative news. Okay, this morning I had a feeling I'd be writing about a rate cut in China. This evening, Shanghai Composite rallied 2.5% in the final hour Friday. Interesting. Okay, so again, that's an interesting tweet with regards from Mr. Scott, who stated that the Shanghai rallied 2.5% in the final hour Friday. So obviously there was some inside information there, otherwise it wouldn't have rallied. Okay, so again, we take that into consideration too. But how potent is the interest rate cut? Given the fact that the Shanghai is obviously stuck at double top resistance, has certainly factored in all the QE, all the stimulus, given the fact that it's up by I think tenfold or 20-fold. Again, any more attempt at tweaking the economy, certainly from my perspective, given the fact that it's up such a substantial level, one could argue that all that has already been priced into the market. And any further rate cuts from China certainly would cause more concern than euphoria, from my perspective, given the fact that the situation is so dire that they're having to cut interest rates so drastically. Okay, so that certainly is another factor that you need to consider as well. Okay, so you have Asia being exhausted. You have the UK election, if euphoria, coming to an end from my perspective. Okay, and you have the jobs data confirming that interest rates are going to rise, so therefore that will be net negative. Given the fact that this market is hooked on the QE and the hopium trade for more stimulus, and if that's no longer to be seen, then again that's a cause for concern. Okay, the other factor as well is the European Union, given the fact that the euro has risen quite substantially. Now, if the dollar starts to rise, that will cause the euro to fall, and that will be a stimulatory measure for EU equities. Okay, so that certainly needs to be taken into consideration too. But having said that, if Grexit obviously does come, and the uncertainty from Grexit is certainly there, then that will have a negative impact on EU equities, and that will certainly force them to move lower. So again, that certainly needs to be taken into consideration too. Okay, so PBOC 225 basis cut to lending rate hikes is to rate takes it to 5.1%. Let me read this. Third rate cut since November last year, on endangered 7% GDP target. Okay, so it's all basically going into Monday. We'll see how the Asian markets react to this rate cut. Obviously, if they gap up higher, Asian markets are higher, then that will obviously force the European markets to push higher too. So we'll certainly have to take that into consideration. So interesting. Okay, so again, we have to be flexible. Okay, and we have our game plan in advance. So get plan A, plan B, and then we adjust accordingly. Okay. Okay, understood. Okay, right. So that's the interpretation from the fundamental perspective. Post-election euphoria, we have to test to see, or we have to gauge whether or not that can continue, whether that fizzles out very quickly. Again, we have to assess the Grexit concerns and the risk regarding that. Okay, then the economic data out of Europe has started to decline, has been relatively weak, especially with regards to Germany. Again, the economic data will need to be observed, and given the fact that we are doing QE and that's still failing to create imports, exports, etc., the economic data or the PMI data has not exactly been overwhelming. Okay, so again, that's a cause for concern, because certain economic data points out of Germany have been very weak, indicate potential slowdown even with a weaker euro. And given the fact that the euro USD has started to rise, given the fact that the euro USD is almost like a stimulant, okay, or a stimulatory jab for the economy, then that certainly is a cause for concern. I mean, we've had this euro now rise from the 1.06 level all the way up to the 1.12 level. Okay, so given the fact that if you look at a 4-hour chart and observe just in the last week alone, we've had a move from 1.05 all the way up to 1.14. Now, is that positive for the European recovery? No, it isn't. Okay, because a weaker euro is positive for the European recovery. So again, that certainly needs to be taken into consideration too. Okay, so this is something that we have to assess in real time and constantly reevaluate, etc., etc. Okay, so that's the situation with regards to the fundamentals. Now I'm going to look at the actual technicals now and gauge exactly where the FTSE stands at this very moment in time. Now I'm going to start with the banking sector. I'm going to try to assess the strength and weakness of each sector, given the fact that it was the banking sector that caused the FTSE pop on the Friday. So if you observe the gap here, the gap 4,550 gapped up almost 120 points. Okay, now it is a doji and it is into resistance. Okay, so you have this resistance zone here, you have the unfilled gap up here. There is no catalyst to close this gap at this juncture. Okay, So that certainly needs to be taken into consideration. Okay, so if I go to a weekly chart, you can clearly see the gap is certainly there on the weekly. There's no real, I mean, if you want to use the election as the catalyst for the banking sector to close that gap, okay, it's totally from your perspective, your understanding, but at this very moment in time, I cannot see a catalyst that will close that gap, and the election certainly isn't one at all. Okay, so again, observe, from my perspective, the banking sector is into resistance. Therefore, one would presume from there that the UK FTSE 100 would also be into resistance. Okay, so this is the scenario situation that we have. We have an unfilled gap below. Okay, so again, that gap can be very vulnerable to being closed, especially with the Brexit situation being certainly in the background. Okay, so that certainly needs to be taken into consideration. So from my perspective, the banking sector in the UK is weak. Okay, if you go to the oil and gas sector now, okay, let's observe the oil and gas sector. Now, we have to take into consideration here with regards to the oil and gas sector that the dollar index is now coming into obviously into support, so that will be negative for the commodities. Okay, what we also need to observe also is the chart of oil. Okay, so if I bring up a chart of oil, I mean, we're going to bring up a chart of Brent Crude first. Looking at a daily chart of Brent Crude, yes, we've broken out, very impressive, but can that sustain itself? Okay, the only reason why we've broken out is mainly because of Yemen. Okay, the situation in Yemen, the economic data in the UK hasn't been overwhelming, so again, that certainly is a cause for concern. So it's all about Yemen, okay, and the geopolitical situation that's caused oil prices to rise. From a daily chart perspective, you are looking pretty exhausted, no real thrust higher there. 4-hour chart, see if you can gauge something, anything from a bullish argument perspective. I can't see anything there at all. If anything, we've broken this key trend line, and we are now looking for a potential H&S argument here, looking for a right shoulder bear flag, and we are looking for a move lower down to the 61 level. So is that positive for the UK oil and gas index? No, it isn't. Okay, certainly bearish. Okay, so if I bring up a chart of crude, okay, crude oil, here we go. So again, daily chart, inside bar, bear flag, certainly isn't bullish from that perspective. 4-hour chart, again, H&S formation, get rid of this trend line, the surplus requirements. Okay, so here we go. So we have a perfect H&S formation, given the dollar index is into support, and the oil price is starting to go lower, given the fact that geopolitics has been obviously factored in now, the Yemen situation, adding also the fact that the oversupply situation certainly is in the background, and this moves lower, and that will obviously force the oil and gas index lower as well, the UK oil and gas. So again, there's no catalyst here. I can't see a catalyst to propel the FTSE higher at this juncture. Okay, so again, daily chart, yes, we did have a inside bar. Okay, the move really has been pretty feeble. Let me just get rid of all this. These are all trend lines. Again, scenario or potential situation here. You got your left shoulder, obviously we put in the head, we're putting in the right shoulder, then obviously looking for a move lower. Okay, and given the fact that you have an unfilled gap below at this region here, again, the H&S formation will cause the oil prices to move lower, which in turn will cause the oil and gas sector to move lower as well. Okay, again, so that's very important. Okay, so let's move on to the next obviously sector now. The retail sector again has pushed higher very impressively. Okay, but one must ask ourselves, has that been supported by UK economic data? No, from my perspective, no. Okay, daily chart has left a gap. So again, given the fact that the UK election, etc., is the catalyst, is that a real fundamental catalyst for for strength in the UK retail sector? Again, you need to question that. Okay, so is that just a short squeeze or post-election euphoria? Okay, again, very concerning. I mean, if we had some strong economic numbers out of, say, Next or Marks and Spencers, then one could justify that. UK election, unfortunately not. Okay, so again, you have an unfilled gap left behind, certainly comes into question. Again, I mean, this will be based on Asia. If the Asian markets can sustain themselves in this interest rate cut, then hats off to them. Okay, you have to respect price action, respect the strength, and the markets will continue to move higher. But for now,
it's all about the UK, and the UK, especially from in terms of retail sector, certainly is a cause for concern, and one must have a solid or strong catalyst for a pop higher, and that certainly isn't there at this very moment in time. So again, that gap left behind makes the retail sector very vulnerable, and one needs to observe this gap below, as it usually acts as a magnet to force price action lower. So retail sector, again, a bearish argument can be made. So again, it certainly isn't looking good for the FTSE 100. The pharmaceutical sector usually is very important, especially given its weighting. Okay, it's very, very important. The pharmaceutical sector is around 8.5 or 9% of the FTSE 100, so certainly needs to be respected, especially when you are trading the FTSE 100. Now, the pharmaceutical sector probably is the only sector, or only sector thus far that I've analysed that certainly one would argue from a daily chart perspective, given the fact that it's bounced off of 200 MA, there certainly is a strong bullish argument. Okay, but having said that, you've put in an intraday, well, you've put in a double top here from March to April, and one could also argue from a bearish perspective that we do have a potential here for a H&S formation as well. So you have your left shoulder. All we need now is a right shoulder to put in, and then obviously the pharmaceutical sector certainly come into potential resistance, given the fact that that double top is in. Once you have a double top, you're looking for a lower high, and then obviously looking for a move lower. So I would say I would remain neutral on the pharmaceutical sector, because we have held previous, obviously, resistance equals support, although we did deploy one below to test the 200 MA. We have potentially recaptured that, and I would like to remain neutral on the pharmaceuticals, but certainly watch and observe it very closely in order to gauge the next direction on the FTSE 100. Okay, so again, that zone there certainly has a lot of support. Okay, this zone here has a lot of support for the pharmaceutical industry. Okay, so certainly remain neutral on the pharmaceutical sector. The next sector is the life insurance sector. Okay, insurance, it's not a heavy weighting, it's almost 6%, but again, along with the banks, you can see that you had a pop higher. Okay, the pop higher isn't exactly very convincing, has left a potential hanging man behind. So again, certainly needs to be taken from that context. I mean, if you put your trend line in, you can clearly see that it is into resistance. You can see that you have previous support equals resistance as well. Okay, so again, this is bearish. It's left a unfilled gap behind, so therefore one would presume, given the fact also that it's slammed into its 200 MA, you also have the gap fill resistance here. Okay, you have previous support equals resistance there. Okay, and then obviously you've left the unfilled gap behind as well. So again, into resistance from my perspective, and therefore will be bearish for the FTSE 100. Okay, right, let's move on to the next sector now. And this is something that I do daily. Obviously over the weekend I pay more attention to, and you can get access to these sector indexes from IG Index. Okay folks, so mining sector. Okay, so this is going to be important, given the fact that the miners are quite heavily weighted on the FTSE 100. Okay, it's around 8 to 9%. Now the miners, as you can see, are very weak. Okay, and again, this is what leads me to believe that this pop on the FTSE is all euphoria, post-election euphoria. You can see here that it's an inside bar. We had an inside day on Friday, even with this post-election euphoria. Okay, and given the fact that all the markets globally were rallying higher, yet the mining sector is under severe pressure. So again, very bearish. Okay, very bearish, very bearish. And again, one could argue H&S formation again. Okay, so
certainly doesn't bode well for the mining sector. Okay, so let's move on to the next index. Okay, so next index we can look at is the beverages. Okay, the beverages is around 6% of the FTSE 100. Let's just observe the beverages sector. Okay, so go to a daily chart. Okay, we had a pop higher, but again, nothing spectacular. Nothing spectacular. In the daily chart, you have previous support equals resistance. Okay, we've put in our quadruple top, or you call it triple top, etc. We've obviously failed to push higher, and the market has obviously remained weak ever since. There is an argument here for an inverted head and shoulders, so one needs to be open-minded, okay, and be aware of both obviously directions. Although you do have an unfilled gap below which potentially needs to close. You've made a lower low and lower high, no more lower lows thus far. So again, this certainly needs to be paid attention to. There is a potential here for a move higher, and one would have to remain neutral stroke bullish on the beverages sector for now, although daily chart certainly is arguing otherwise. Okay, so again, this we've had this pop here. We're retesting previous support equal resistance, therefore looking for a potential move lower. But on the smaller time frame, certainly an argument could be made for a push higher. As we always know in technical analysis, larger time frames take precedence, therefore we must adhere to the larger time frame. Now the tobacco sector, as a lot of you may well know, is also heavily weighted on the FTSE 100. It's around 5 to 6%. Okay, so again that needs to be observed. Given the fact that the 60-minute chart is showing you clear resistance at the 200 MA. Again, if you do push high, you have previous support equal resistance. So again, I would argue I'm going to negative camp here. Okay, we've had this push higher. We've had the bounce off the 200 MA again. So from that perspective, if I just draw in my chart here, as you can see, we've held that line. We seem to be going into some form of symmetrical wedge pattern on the larger time frame. You had this red candle here that was dictating around this red candle here. So again, we've had the pop higher. Still remains relatively bearish from my perspective. Okay, we've had the pop higher of the 200 MA and the diagonal trend line, and it certainly seems to be exhausted. Alternatively, we could have one more pop up to the upper diagonal trend line, and then we could pause. But from my perspective, given the post-election euphoria, short squeeze, etc., it's going to be very interesting to see the reaction on Monday and whether we can sustain ourselves higher, which from my perspective, very, very unlikely. Okay, righty then. Okay, so the next chart we observe. Okay, so we can look at hotels, media. You look at the media sector, again, it's weak. I mean, the daily chart showing you lower lows, lower highs. You can look at the hotel and leisure sector, given the fact that sterling rise obviously is negative for hotel and leisure. One could argue certainly, I mean, you can see there hanging man, so that unfilled gap below will close. Okay, so my conclusion based on the sectors overall is negative. Okay, so now I'm going to look at the actual index itself and see whether I can gauge any strength or weakness. Now, my first chart that I'm going to present to you is the FTSE Volatility Index, and that's showing me that the FTSE 100 is into resistance, or is proving to be that the FTSE 100 is into resistance because the Volatility Index is into support, because they are inverse to one another. Okay, so as you can see, the FTSE Volatility Index failed at that level, sold off quite substantially, has put in a bottoming tail, and is now into support. When the Volatility Index is now into support, then the FTSE 100 is into resistance. Okay, the FTSE 100 chart now. Okay, looking at a daily chart, or let's start with a weekly chart and work our way down. The market is consolidating here. Okay, so one could argue that we've consolidated, we're looking for a bull flag and certainly a move higher. But my concern is that the weekly chart dipped below this green candle here. We dipped below 6833. Okay, therefore that negated the bullish argument, or the bullish candle. The bulls did survive, they did keep the market afloat, but certainly remains very, very, very vulnerable, and I will not be surprised if that green candle were to go and lose steam. Okay, from my perspective, so it certainly creates a vulnerability. The bull flag certainly is on, because we've held the previous resistance equal support. But given the fact that we dipped below and sold off as substantial to 6809, 6803, and knocked out a lot of the bulls, okay, in that week alone, I would say it certainly is the strength of the rally certainly has been depleted from my perspective, just based on the price action alone. Okay, and given the fact obviously you're looking at a potential rate increase down the line. Okay, so it's certainly is vulnerable to a sell-off. Okay, that's what I would say for now. Daily chart, yes, we've thrusted higher, bullish engulfing candle, but that candle really is a short squeeze. Okay, that's all I can interpret thus far. I need subsequent candles confirming the strength of the FTSE 100, and that buyers are going to step in and buy this market going forward, given the fact that the Conservatives are now into power. Now that's going to be very hard given the fact that we have obviously rate increases, we have Brexit concerns, obviously economic data is starting to slow. Again, that's going to be very, very interesting going forward. Okay, right, the daily chart, again you have potential resistance at this zone here. So if I just highlight it here, okay, resistance here which is at 7050. okay, that's going to be very interesting. If that goes, then we have 7120 as the next potential resistance level. Using your Fibonacci from the pivot high to the pivot low, you are into Fib 75% resistance. Therefore, I would presume and expect that resistance level to hold. You also have this horizontal resistance 7066, but I expect the resistance at 75% to hold. Given the fact that we moved almost 250 points within 48 hours, based in price action alone, that is something that's not sustainable. Okay, so based on that, all those factors, I expect the FTSE 100 to hold the 7050, and I will be looking to potentially short the market. Again, it will be interesting to see how the markets react to this Chinese rate cut. My interpretation thus far is that it's a cause for concern that the Chinese are cutting the rates quite drastically. That obviously shows that they are concerned. They have economic data that is a cause for concern, so their growth is certainly slowing quite drastically. Okay, so that isn't exactly a bullish sign, and if it is a bullish sign, or it is interpreted as bullish, given that the Shanghai is up quite substantially, it's already been factored in. Okay, and given the fact that it was a bearish engulfing candle last week with a rate cut the week before, that certainly isn't a promising sign. Okay, so FTSE 100 daily chart, as you know, and my argument here certainly is bearish. Okay, so 60-minute chart of the FTSE 100. Yes, we've broken this diagonal trend line. This is where I got stopped out. Okay, and now we are into this zone here, 7050, 7060. Okay, so again, those two zones are acting as the horizontal resistance for the FTSE 100. Again, if the Chinese rate cut pushes the FTSE 100 higher, gaps higher above say 780, 790, then you obviously with the next level resistance level on the FTSE is 7120, and that certainly needs to be respected. Okay, right, the 10-minute chart now. This is an argument that I put forward to my subscribers. There was an inverted head and shoulders formation. Inverted head and shoulders has hit its target, therefore the move is over. The short squeeze should be over, and therefore we are looking for a potential move lower. Okay, that was my interpretation of events. Okay, so if you look at, especially with the UK trade data coming out weak as well, okay, you have a rising contracting wedge pattern. Again, that's generally considered bearish, and we are looking for, or I am looking for, a move lower down to these levels here. Okay, you have obviously horizontal support 7,000, and ideally you're looking at 6,980, and that's ideally the level that I'll be looking at with regards to the FTSE 100 on the downside going into Monday. Okay, now looking at other alternative indices, FTSE 250 is negative. Why is it negative? The reason why the FTSE 250 is negative is because it's heavily dependent on exports, and exports are dependent upon the currency movements, and given the fact that sterling has started to rise, okay, that again is interpreted as being bearish for the FTSE 250. Okay, again, that's a post-election euphoria candle. Can it sustain itself? The FTSE All Share, again, if I go to a daily chart of the FTSE All Share, we did break below. We've put in a potential topping tail there. I'm not sure if that's a misprint. Okay, but for now, the way in which I interpret things is that we've obviously put in a triple top resistance. Now we are looking for a potential lower high, and you are into the Fib 75%, although we have cracked it slightly, but we are putting in a potential lower high, and given the fact that we've put in a double top, triple top resistance at 340, that should hold in the interim. Okay, that should certainly hold in the interim, and one could certainly argue as well that you have a potential for inverted head and shoulders. Your left shoulder there, your head obviously has gone in here, and then obviously potentially if right shoulder remains below, then you are looking for a flush lower. So that 3840 level will certainly be a key resistance zone, and whether or not the FTSE All Share can continue its thrust and move higher. Okay, obviously if we break higher above here, then the next resistance level is going to be at 3900, and I have to I have to adjust my bias and given the fact that Asian markets continue to move higher, the rate cut in China, which has just come, the news flow that's come out now, is interpreted as bullish. The economic data on Friday is from the jobs report is interpreted as bullish. Brexit concerns are no longer there because there's a deal. Then they would be the environment or the surroundings for the markets to potentially push higher. So again, always be flexible. Okay, always be flexible. That's the most important lesson that I can tell anyone, especially when you're day trading the markets. Don't be obsessed with your opinion or your thought process. Okay, because it's the market that actually dictates. It's not your opinion or thought process. You can plan all the scenarios in advance. So for example, right now I'm giving you a bearish scenario, okay, but I'm also open to a bullish scenario as well. So if my bearish scenario doesn't play out, then I have to adjust and go to plan B, okay, and adjust accordingly based on the markets. Okay, so the FTSE Oil share, certainly an argument here for a double top resistance and obviously a potential lower high. So again, argument for a potential move or thrust lower. I think I've covered the FTSE 100 now, so if I just go back to the FTSE chart again and show you here a 10-minute chart. Okay, so we're around the 7040 level. We've got resistance at 7050, 7060. So 7050, 7060, 7040, all key resistance zones. I'm looking for a potential target of 6980 on the downside and a potential move lower. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.